That, in order for us to build wealth, it's not just about how much you make, it's about how much you maintain, how much you can, now go ahead and reinvest and pay off debt and do things like that.
He said, that's where y'all be messing. He said, that's where y'all be messing up at. He said, because y'all can make more money than me, but in the long run, I'll make more money than you.
Because of the strategy.
Because I keep it because of the strategy. Help me understand what are the benefits of having a business and a W-2 job.
First couple of years in operations and you're not quite at a profit yet, you can definitely utilize the losses from that business to offset the income from your W-2 job.
Other communities, they have their CPAs. They understand that as I bring in more income, I need to put it away in certain areas.
One thing I've learned is that wealthy people don't just file taxes once a year, they actually plan ahead, legalize minimizing the tax bill, and move their money strategically. What's going on, family? It's your boy, Anthony ONeal. Listen up. If you're serious about keeping more of your money, getting ahead financially, and building wealth the right way, then you need to be locked in on today's special show. I'm calling it a mashup. With all the tax changes and proposals being thrown around by President Donald Trump and his cabinet, one thing is clear. If you don't have a real tax strategy, you're leaving money on the table. And I don't know about you, but y'all, I refuse to give the IRS any more than I have to do. I wish I could cuss because I'll just say, man, F the IRS. I could say that. I could say F as in forget. See, y'all thought I was going somewhere. Right? I really do want to cuss though. But one thing I've learned is that wealthy people don't just file taxes once a year, they actually plan ahead, legalize minimizing the tax bill, and move their money strategically. Over the last 2 months, I've been meeting with my accountant and my CPA firm, just coming up with the strategy for 2025. Because with the new tax laws that Donald Trump has put out, and today's show is not going to be about what he put out. You can go back and watch that show. Michelle, go ahead and link that inside today's show for them. But I'm going to help you understand. I'm going to go back into our archives with my CPA, my personal CPA, and help you come up with the right strategies for this year. And it's not about doing it alone. It's about having the right people in your corner. So in today's show, we're going to be talking about why tax strategy is just as important as your income, the difference between a CPA and a tax preparer, and why one could be costing you more money. So both of them are important, but which one do you actually need? Then we're going to talk about the power of having your A team, an advisor, an attorney, and an accountant, so you don't get played when it comes to the tax code. So if you're ready to stop overpaying in taxes, build wealth the right way, and set yourself up for a long-term success, then this episode is going to be for you. So listen, I want you to grab your pen. I want you to take some detailed notes. I want you to drop your questions inside the comment section and or chat if you're watching this live, because we're going to get into it. But before we get into today's show, man, I definitely want to thank our sponsor of today's show at BetterHelp. You're going to watch a quick commercial from them about them. But then also, man, following them is, man, something that's going to help you get the most money from your taxes this year. Listen, don't play with this. I need you to lock in. I need you to take advantage of it, because this company right here guarantees to get you the most taxes this year. So check out our today's sponsor, BetterHelp, and then also followed up by my dear friend, Victoria Lewis, on what she can do for you during the tax season. Let's get to it.
Y'all, want to thank my friends over at BetterHelp for sponsoring today's show. And speaking of sponsoring today's show, man, especially around this month, isn't it funny that everyone is always talking about, man, you better spot the red flags, you better spot the red flags. But what about spotting green flags in people? To me, green flags are all about healthy relationships, not just romantically, but in friendships too. It's time to form connections that truly love and support you. If you're not sure what those green flags look like, therapy can help you identify them and build better relationships. Personally, I turned to therapy to help me navigate both the red and green flags in my life. It's been instrumental in teaching me how to set healthy boundaries and empowering me to show up as the best version of myself every day. You can experience the same name transformation with my friends at BetterHelp. I love that it's fully online, making it affordable, extremely affordable, and it's convenient and trusted by over 5 million people worldwide. With access to a diverse network of more than 30,000 credentialed therapists. You see, BetterHelp makes finding the right fit for your needs simple. I need you to go to betterhelp.com/AO today to get 10% off your first month. Again, that's betterhelp.com/AO right now. Listen, before we get back to today's show, your mind is your business. Take care of it. Get you some therapy. All right, let's get over.
Why is it important for us to really understand the importance of having a tax strategy?
So again, finances in our community is just so taboo. And the thing about it is that most Black Americans are like working class, right? And the more you learn about taxes, you realize that, you know, the low income and the middle class, working class, whatever you want to call it, they pay the most taxes, right? Wealthy people are earning their income from other ways where by the time they figure out their effective tax rate, which is, again, the amount of tax that you pay based upon all of the income that you earned, right? Because, you know, I have clients that earn millions of dollars and they pay the same effective tax rate as someone who made 100,000, right? So once you understand that, you know, in order for us to build wealth, it's not just about how much you make, it's about how much you maintain, how much you can, you know, now go ahead and reinvest and pay off debt and do things like that. Taxes, you know, weigh such a big part. For the fun fact, most Americans pay more than 50% of their income over their lifetime to taxes. That's crazy.
What?
Yeah, 50% of your income. If you think about it, income tax is just one tax. You're also paying what else type of tax? Sales tax. If you own a home, now you're paying what? Property taxes, real estate taxes, school taxes. You know, if you buy a vehicle, what are you paying? You're paying sales tax, right? So out of all the taxes that we pay, it takes away from at least 50% of our income. That's way too much. So I want clients to be more tax conscious, right? So, and again, specifically in our community, like being more financially literate and being more financially conscious, being tax conscious is a really big important part of that, because when it comes down to what goes out, taxes is a big piece. So let's actually look at that. How can I minimize this area so I can have more to put in these other areas?
I've never heard of that stat before, that over our lifetime, we will eventually end up paying 50% of taxes. If we put the right strategy in place now, will that number go down?
Drastically. Like, again, most wealthy people, their effective tax rate, or at least on the personal end, because remember, you can be structured to where I have a corporation that's paying me, and the corporation is paying its taxes. You at the personal level now can tax strategize at that level to where you're not paying any taxes. You know what I'm trying to say? Real estate is one of those great plays to where if you properly do it and properly calculate, with the help of depreciation, you can, you know, make a decent profit per property, use depreciation to not have to pay any taxes. And again, the depreciation is an expense that doesn't actually come out of your cash account. And now, so say for example, after one property, you're profiting $15,000 per year, a small amount, right? With depreciation, your tax on that, $0. Now, let's take that $15,000 and do that with 10 properties. Now I can legally make $150,000 a year and not pay any taxes because I properly calculated how much I make per each investment and the associated expenses to where I get my net taxable income at $0.
Oh my God.
Yes.
You talking my language. Girl, let me tell. She doing something to me. I can't say I'm right, but Lord,
Anthony.
That's making me feel good right there.
Yes, you're in good hands.
Hey, listen, I ain't going nowhere. I ain't going nowhere. I was just actually talking to my my guy, CJ. Said, hey man, you connected with this tax person yet? He was like, man, not yet. I said, man, what you doing? What you doing? You know what I'm saying? We especially in the Black community, I think we get so wrapped up on making the money that we do not put the strategy in place, man. And I say this respectfully, every wealthy white person that I meet, every white person that has a business and is doing pretty good, man, that's all. Everything is a tax move. Like if it doesn't benefit me on the tax side, I don't want it. And I was like, really? But then like Black people, respectfully, it's like, how much money can I make? And there's one white guy, he said, that's where y'all be messing up at. He said, because y'all can make more money than me, but in the long run, I'll make more money than you.
Because of the strategy.
Because I keep it because of the strategy.
Every tax rule really applies to like how you conduct business.
Okay.
Once you change how you conduct business, you now open up a different realm of the tax code. So for example, with Section 179, in our example, like that was a business vehicle, so we're able to write it off, right?
Yes.
Now, so say for example, for some reason, they change it and you can't do 100% deduction anymore for a vehicle. Okay, that's in the case of someone who's buying a business as an asset. But now, if your main purpose of business is like to buy and sell cars, the thing about it is like buying vehicles now becomes an expense because it's ordinary and necessary in that field, right? So, I mean, of course, it's still subject to depreciation rules, so that's going to like also impact how it's reported. But because you're actually like in the business of buying and selling cars, it changes things, right? Or, so say for example, if you're in a business of like renting those cars, it'll change how you can recognize how it's expensed against it. So a lot of deductions has to do with how you're operating first and foremost, because really, again, the IRS rules are ordinary and necessary, so we can like maximize what ordinary and necessary means for you to where, again, you can still deduct that. We're definitely going to take that route as well.
So if I was to do a Turo business, legally and ethically, because some of y'all watching right now was like, oh, he trying to find loopholes and he lying. No, because some people be watching these shows and be trying to say stupid stuff. So I'm asking a real question. If I legitimately wanted to open a Turo business, right, and I went out there and bought me another Range Rover to put on Turo to make profit, what are my legal rights for the tax code? Can I do 100%, or am I doing depreciation like for my Bentley? Like what we
So depreciation is always going to have to happen, right? Because really what depreciation is meaning that you invest in the major asset, and the way accounting works is we try to match when you're going to use that asset versus when it's expensing.
Okay.
So like regardless, you're going to still have to depreciate.
Okay.
But again, the Section 179, they're not, you know, it's always going to be another like section of the code that may just give you more benefits, you know, specifically if you have this business that's specifically for car rentals.
Yeah, yeah.
So how you depreciate that asset can change pretty much, right? So again, based upon the usage, you know, you'll be able to depreciate over a certain amount of years, but in certain cases, you can accelerate that depreciation in other areas. Because what Section 179 was accelerated depreciation, right? So again, the tax codes may change, but ultimately, in most cases, you're still able to get a similar outcome just by using whatever new tax legislations are out there if you can do the proper tax research to support that.
Yo, what's going on, family? Let's talk about taxes real quick. Hey, listen, I know it can be stressful, it can be confusing, and a serious headache. But what if I told you that my people over at Redefine Revenue have already helped their clients get back millions of dollars, almost $1 million in tax returns? Yeah, I said it. That's real money back in their pockets where it belongs. You see, Redefine Revenue isn't just about filing taxes. They're about keeping more of your hard-earned money, planning for your future, and actually helping you understand what's happening with your finances. Let me break it down for you. You see, more savings, they will find deductions and credits most people will miss. Less stress. No more last-minute panic or guessing games. Year-round financial wellness. They'll help you stay ahead with expert tax planning, personalized advisory services, and financial education. So if you're a business owner, a freelancer, or just tired of overpaying on taxes and want to minimize your refund, this is for you. Listen, do you want to make tax season easy and keep more of your money? Then hit up my friends over at anthonyoneal.com/file taxes and let Redefine Revenue handle the rest. And because you're rolling with me, when you sign up using my link, you'll get access to an exclusive bonus ebook called A Guide to Managing Expenses. They'll send it straight to your inbox. But do not wait until the last minute. Every single day you delay could be costing you money. Click the link now and start saving today. Trust me, you'll wish you did this sooner. Here's the deal. Smart taxes equal more money in your pocket. Redefine Revenue helps you build wealth, not just file taxes. Let them maximize, I'm saying this again, let them maximize your return and elevate your revenue. Visit anthonyoneal.com/file taxes. All right, let's get to today's show.
would you say that someone, let's say someone who's making $40,000 a year, should they go to a CPA, or is it okay for them to go to a tax, what's the word? Preparer?
Preparer.
Yeah, tax preparer. Which one would you say, in your opinion?
It would depend.
Okay.
So if it's, just your regular W-2, that's it, then going to a tax preparer is fine. But now if you're at 40K, you have a W-2 and maybe you have a business, then you may want to consider going to a CPA because they can implement some of those additional deductions that if they go to a regular tax preparer, they may not know, or even if they do it themselves. I know a lot of the tax softwares don't even offer that as an option.
Yeah, I like that. I want to talk about that. Let's stay right there. You brought up you got a good question. We have so many people in the influencer world, right? That I'm not going to attack nobody because I love everybody. I really do. But I really do believe in someone getting a side business, a legit side business that they're really doing and operating, right? While having a W-2 job. Help me understand what are the benefits of having a business and a W-2 job. So like, can I really save money on my taxes if I have a legit business that I'm operating and I have a W-2, right? Let's say for an example, I have a W-2 and I claim, 25. So I'm getting the majority of my money on my W-2. Then I have a legit business I can write off on. Will I see a balance on, how much taxes I have to send out, or are we filing two separate things?
So I would say it would depend. So let's just say if it's your first couple of years in operations and you're not quite at a profit yet, you can definitely utilize the losses from that business to offset the income from your W-2 job. And then you'll get some of that, those tax withholdings that was withheld from the check back as a refund. So that's one of the benefits.
So I can get a refund if I have a legit business. Y'all hear me saying this? Legit. Everything is, what's our saying? Legal
and ethical.
Yes, it has to be legal and ethical, and even moral. I don't teach scams over here. I don't teach, this is just not what I do over here. But it's like, I like what you're saying. So if you're running, let's say for an example, okay, you're a hairstylist on the side, right? And you're running a business. You have a room in your house, in your apartment, and you're doing hair out of that room. But then you work Monday through Friday, a 9-to-5 job. And the first year, let's say you spend, for an example, $20,000 in expenses. Y'all are saying we can file those $20,000 on the expenses. Now, correct me if I'm wrong, because I'm not y'all. I'm a money guy, but I'm not y'all. And the reason why is because that LLC will pass through to you personally.
Exactly.
Break that down, because I don't think people understand exactly what that means, and I don't want to screw that up.
Okay, so say for example, you have a single member LLC.
Single member LLC.
That gets filed on your personal 1040, which is your individual tax return.
Okay.
On a form Schedule C.
Okay.
And actually, so your wage and income gets reported on line 1 of your 1040. The income that you earn from your business will get reported on line 8. And then that all affects your total income, right?
Yeah.
So if your business has a loss, now if we do the addition, so say for example, we have 50K in W-2 income, 20K in business losses. This means that when we get down to calculating our adjusted gross income, that it's going to be a lot less than $50,000. It'll be $30,000. And that's also before we take in consideration your deductions, right? So whether you're going to take the standard deduction, which is $13,850 for 2024 for single individuals, now your taxable income gets even further reduced. So when we calculate your tax, typically, if you have W-2, you are having withheld taxes throughout the year, right? So every paycheck, you're paying taxes to the IRS and to the state.
Yes.
Well, because you have that business loss, when we calculate your tax, it's going to be a lot lower than what they were expecting, because you only have the W-2 income that they are aware of, right? So your overpayment in taxes, because you had too much withheld because they didn't account for the business loss, you're going to get a higher refund if you were due a refund due to the fact that you had a business loss, because your taxable income ended up being lower than it was expected for the year.
I want y'all to talk about the importance of a financial advisor having a great relationship with your CPA. Because like over every year right around this time, you actually emailed them about me, and y'all meet about me sometimes I'm not even meeting. So let's break that down. Why is that so important for you to have a good relationship with, my CPA?
Yeah, it's so important because, we talk about building wealth, and building wealth at the end of the day, as your income gets higher, I have to have a good relationship with whoever your tax person is. We have to strategize. I mean, you heard that enough time. The word of the day is strategy. And you have to have a good strategy when it comes to what are we going to do with this excess income. Like you said, other communities, they have their CPAs. They understand that as I bring in more income, I need to put it away in certain areas. So I work to execute. They work to give me the strategy, right? So they're going to run all the calculations. They are going to, let's say for 2023, they're going to, it is 2024 right now, right? They are trying to, as much as they can, see the future and see what your tax liability is going to be. Right. They can say, okay, we need to figure out what to do with this amount of money. Yes. They'll look at me and say, in Judaica, what you got? Exactly, right? What accounts do we have? What strategies do we have? Because we each have different lanes. She respects my lane, I respect her lane, right? And that's where, and then with your attorney, that's not our lane at all, right? And so everybody plays their role and plays their part. So it's just that, you check in with one, check in with the other, check in with the next. And it all kind of comes together.
From your end, what would you say? Like, why is it important from the CPA to have that relationship?
Yep. So as a CPA, again, we're specifically focused on, so CPA stands for Certified Public Accountant, right? So we're focused on your accounting, making sure your books are together. We got a tax plan in place, and we're filing your taxes. We're also in accounting compliance in various capacities. When it comes down to financial planning, which is a part of your tax strategy, we don't specialize in financial planning, right? So there are certain accounts, so understanding, for example, based upon your profile, what's best for you? Do you need a solo 401k? Do you need a SEP IRA? Do you need, a Roth? Do you need a combination of all three? How much do we put in each of those three? That's your financial advisor. That person is thinking about your future and how do we get you to your wealth goals in regards to financial planning.
Yes.
Then also in regards to tax strategies, certain accounts need to be open, and there's also due dates, right? So again, your CPA is busy doing your accounting, your tax planning. Your financial advisor is making sure that we also are abiding by certain due dates. So to open up certain accounts, you have to have them open by certain days or funded by certain days. Right. So as you know, Injadeca, she be on all of us. Like, all right, so what's going on? I haven't spoken, trying to make sure, what we finna do here. Yeah. So honestly, and the thing is, I work with a bunch of financial advisors. Working with Injadeca has been amazing because it's rather than, again, we're very involved with our clients, but having someone who like her who's also very involved with their clients, it just makes the flow just so much. Again, even with working with Jason, shout out to Jason again, how quick he was to come back with research and a response and okay, here's the next steps. So when you have a strong A team, again, the system just works, it works. So the benefit really is there. They play an integral part in the system. So again, having someone who's knowledgeable in things that we're not knowledgeable in as much, like contribution limits, or sometimes the laws change and you can't do certain things with certain accounts anymore. Your financial advisor, most professionals are required to do continuing education. So we're doing continuing education as CPAs in the areas of accounting, taxation, sometimes business law, et cetera. Your financial advisor, they're your people with retirement planning, life insurance, just long-term, financial planning. So again, we stay in our lanes.
Yes. And I love that. I really do love that. I think the Q4 of 2023 in Jamaica was getting on my daggone nerves. In a good way, though.
I'm doing my job.
Right. It's when you pay someone, some people have been I reached out to you, you didn't hit me back. But in Jamaica, she'll email me, then she'll email Shania and Natalie, hey, you guys, what's going on? We need to get these accounts funded. What's going on? Da-da-da-da. And I love that about you from day one. You know what I'm saying? And when I spent about a year with her first for myself, because she's thorough. This woman knows what she's doing. Then I incorporated you in with my entire team. And I think that all of my team members have come back and said, yo, we got a solid plan. And the reason why I thought that was important is because while I'm the money guy, I don't want my team to feel uncomfortable coming to me about their personal situations.
Right.
And so I didn't want to be like, hey, I need to sit down with you and go over a budget, go over your money, and then they'll be somewhat embarrassed if they're not at a certain place. But I want them to win. And so I paid them to sit down with you, actually all my team members. Jay's our newest team member, and he's sitting down with you now, actually. And I think it's very important, you guys, for you all to have an advisor in your A team. But it makes sense for me. Let's make it make sense for someone in Jadeka that may be making $50,000 a year.
Sure.
Why is it important for them to sit down with you, only making $50,000 a year gross? That's only about maybe $38,000 net. Why should I pay you if I'm only making $38,000 a year?
Yeah, and it looks different, right? Depending on income-wise where you are. But the reality is, in order to get to where you are, you have to learn disciplines at 30,000. You have to learn disciplines at 50,000. So if you don't know how to, we talked about, I mentioned just you getting your a person getting their personal money management system together, right?
Yes.
You being able to inventory your own personal finances. So people, when people are talking about building wealth, a lot of times it can feel overwhelming because it's like, I gotta buy the house and I have to have all this capital and I'm like, listen, the first part of building wealth is taking control of your finances. That's the first part. It's just you becoming aware of what's going on in under your financial house, right? So what does that look like? That can look like you just inventory what are your bank accounts?
Yes.
List them all out, right? And sometimes I'll tell people, you might want to get a glass of wine for this, because I don't know what your stuff is going, what it's about to look like for you, right? But you need to write out all your accounts, right? If you have personal accounts, business accounts, credit unions, right? The mother banks, right? Whatever you have accounts. What are your bills? Write out go do a spending audit. Go through your last 90 days of your expenses. Go through your bank account and see what are you spending your money on, right? Identify what are your real bills, like your fixed expenses. What are some of the variable ones? What are some of we call it sinking funds. And so those are just, the types of bills where they don't come every month per se, right? So like my auto insurance, I don't pay auto insurance every month. I pay it every 6 months.
Yeah.
Well, I should be putting money away so that when that $800 bill, $700 bill comes and, the next, right, on a particular month, I'm not like, oh, shoot, if I'm a W-2 worker, the majority of my paycheck has to go to pay that bill. No, I've been putting money away for it. So doing audits like that, your debt. What is your debt looking like? Just inventory everything. That's the first thing. That's taking control, and that's so powerful. Because a lot of people, listen, I understand. You want to kind of be not want to be in denial, but it's just easier to be in denial, because it's a lot, and you have to face certain things, like certain financial decisions that you've made, right? When you do that, but that's the first step to building wealth is you taking control and becoming aware, and then putting your budget together, putting a bank accounting system together. And so it's not just I have one checking account. It's not just I have one checking account, because with you, for example, or any entrepreneur, you're not going to just have one account. You're going to have multiple accounts, right? And those accounts have purposes. Every account has a purpose. So you have to just be prepared to do that. Again, whether you make 30, 50, 75, especially with people that have side hustles, you need to learn that type of a system early on, so that when you begin to make more and more money, it's not just lifestyle creep, right? Oh, I'm making more income, so I'm spending more money. No, I know my system. I have a personal money management system in play, and that's where that comes in. It starts early.
She said it, and Jadeka said it. You preaching what I'm preaching. It doesn't matter. I like how you said, hey, no matter what level you're on right now, you need to get with someone who's going to walk you through the journey. And someone coming in and making $50,000 gross with both of you all will be on a different journey. They may not need to see y'all every single month, right? Y'all give them a plan, and then y'all will help them grow. And then as they're growing, they'll see you all more. Exactly. And you have more services that you will need. But the problem is you don't want the strategy. You just want the money. And I've learned too, the right strategy makes you more money, and it saves you more money.